Financial tycoons, severe real estate shrinkage, Chinese banking system in collapse. Transaction limit of 5,000 yuan, multiple banks in China lower customer transaction limits. Tight control over citizens in Beijing ahead of CCP's third plenum. Chinese photovoltaic industry suffers losses, experts analyze fundamental problems. 68,000 child pajama sets sold via Chinese app Temu recalled over burn hazard risk.
It's all covered in today's China Truths.
Financial tycoons, severe real estate shrinkage, Chinese banking system in collapse. On July 9, Mr. Kyle Bass, founder and chief investment officer of Heyman Capital, issued the above warning on the social platform X, bluntly stating that the Chinese banking system is on the verge of collapse. Bass noted that China's banking assets are 340% of its GDP, compared to the US's 100%. Over a third of these assets are invested in the struggling real estate markets of China and Hong Kong, which have shrunk by 30% to 50%, threatening the entire banking system's solvency. Previously, on July 4, the British Economist reported on China's savings and loan crisis, highlighting the plight of about 3,800 small rural banks with assets totaling 55 trillion yuan, approximately $7.6 trillion, or 13% of the banking system's total. These banks have been poorly managed, lending heavily to real estate developers and local governments, resulting in 40% of their loans becoming non-performing. In the week ending June 24, over 40 banks disappeared through mergers with larger banks, a rate of consolidation not seen in the U.S. even during the mid-1980s. The report warned that merging failing banks only creates larger failing banks, accelerating the system's collapse. Despite their high savings rates, Chinese people have faced difficulties withdrawing their savings, with some deposits vanishing. The most impactful incident involved illegal savings absorption by multiple Hunan Township banks, leaving many depositors unable to recover their money. Recently, some banks have required police station proof for large withdrawals, causing social panic. Additionally, Hong Kong tycoon Ka-shing recently advertised homes in Dongguan, China at half price, causing concern in the market. His company sharply reduced prices on its real estate project, Harbor Plaza Residences, where some apartment prices are now equivalent to a 50% discount compared to the recorded prices. This news quickly trended on Weibo. Chengkong Group announced that Hai Mansion is offering 30 special price homes, with down payments starting at 140,000 yuan, about $19,300. Domestic media Daily Economic News estimated that the lowest price of Hai Mansion is about 13,000 yuan, about $1,800 per square meter, which is more than half the price reduction compared to the recorded unit price of 31,000 to 43,000 yuan, about $4,300 to $6,000, on the Dongguan Housing and Urban Rural Development Bureau's official website. The report described the significant price cut by Chengkong Group as unprecedented. Some domestic scholars listed three possibilities for readers to choose from. The first possibility is that the real estate market is about to collapse, and those who run faster will benefit. The second possibility is a group buying discount, nothing to be alarmed about. The third possibility is returning housing prices to normal. Blogger chairman Zhang Chaoyang said, "Everyone can recall that last year, a property under Ka-shing in Hong Kong was sold at a 30% discount, and it was very popular at the time." Since then, what has happened to Hong Kong's housing prices? This time, it is clear that Ka-shing wants to get out quickly, selling as much as he can. His operation skills are quite superb. Transaction limit of 5,000 yuan, multiple banks in China lower customer transaction limits. In recent years, incidents of bank cards being frozen and transaction limits being lowered have frequently occurred, becoming a hot topic among Chinese netizens. Since July, many banks from Zhejiang, Shandong, Shaanxi, Hebei, Liaoning, Guizhou, and other regions have announced reductions in non-counter transaction limits for some customers. Recently, Ms. Yuan complained on social media, "I suddenly found out my transfer limit was lowered. I can't make large transfers to my mom anymore." Several netizens reported similar experiences of having their transaction limits reduced. The topic of lowered transaction limits has also become a trending topic recently. One netizen said their bank card, which they had used for 20 years, was limited to 5,000 yuan, almost $690. Another discovered that the non-counter daily payment limit was 1,000 yuan, about $138, which wasn't enough to pay their rent. Some netizens mentioned that the limit effectively curbed their spending impulses, with one stating, "Thinking about having to go to the branch to increase the limit makes me not want to spend." Mr. Su from Shanghai faced a similar situation. According to a Jimin News report, Mr. Su's daily transfer limit on his payroll card was lowered to 500 yuan, about $69, without prior notice. When he called the branch, the staff explained that it was to ensure the safety of the funds and to prevent fraud. According to the China Securities Journal on the 12th, since July, many banks in Zhejiang, Shandong, Shaanxi, Hebei, Liaoning, Guizhou, and other regions have issued notices announcing the reduction of non-counter transaction limits for some customers. Regarding the reasons for the reduction, many banks stated it was to strengthen the management of personal bank accounts, reduce the risk of customer funds being lost, and comply with regulatory requirements for classified and graded management of personal bank accounts. According to the Securities Daily, since the beginning of this year, Bank of China, Huaxia Bank, Jiangsu Bank, and others have adjusted the limits for non-counter payment transactions. The aforementioned banks explained in their notices that the reduction in non-counter transaction limits is to combat telecom and online fraud. A month ago, a netizen posted a video showing that their mother was required to get police approval to withdraw less than 100,000 yuan, about $13,800, from Jilin Bank in Changchun. According to Jimu News, Jilin Bank staff confirms that withdrawals over 20,000 yuan, around $2,760, need police verification to prevent telecom fraud. Recently, multiple banks in China have faced withdrawal difficulties, causing dissatisfaction and even vandalism in branches. In January, a woman from Pingdingshan struggled to withdraw 5,000 yuan, almost $690, transferred by her sister at Zhongyuan Bank, a story that went viral on Weibo. The bank staff asked excessive questions and demanded proof of their relationship, despite showing chat records and calling her sister. It took nearly 2 hours and police involvement to withdraw the money.
Tight control over citizens in Beijing ahead of CCP's third plenum. Delayed for nearly 10 months, the CCP's 20th third plenum will be held from July 15 to 18. On July 12, the Beijing Municipal Public Security Bureau announced that from midnight on the 15th to midnight on the 18th, all units, organizations, and individuals in Beijing's administrative area are prohibited from using drones and other low, slow, and small aircraft for various sports, entertainment, or advertising activities. On July 14, Mr. Li, a Beijing resident, told the Epoch Times that the control for this plenum is very strict. A friend from Hebei, who is not a petitioner, received a notice on the 12th not to enter or leave Beijing without a valid reason. He also revealed that officials are inspecting security measures. On the morning of the 13th, the Beijing Metro Line 1, from Wanshulu to Yuquanlu, was suspended around the Jingxi Hotel area and the station was closed. It reopened after 2 p.m. According to the Tsingtao Daily, more than 370 Central Committee members and alternate members, including the CCP leadership and senior officials from central agencies, provinces, cities, and the military, will attend the third plenum. The meeting is typically held behind closed doors at the Jingxi Hotel. Mr. Li noted that there is a heavy police presence on the streets. On the afternoon of the 13th, when he passed by the Jingxi Hotel, there were numerous special police, plainclothes officers, and public security personnel, some checking IDs, controlling crowds, and intercepting petitioners from various regions. He mentioned that on the nights of July 10th and 11th, the Fangshan District Yan Village Police Station in Beijing deployed a large police force to check the residential status of migrants and strictly control dissidents in the area bordering Hebei. Additionally, Ms. Yang Ka-shing, a petitioner from Jintan District, Changzhou City, Jiangsu Province, told the Epoch Times on July 13 that her 71-year-old mother went to Beijing to petition for help from Xi Jinping. Due to the plenum, she was intercepted by local police on July 3. After she returned, she was directly sent to the detention center and criminally detained. The police told us that the length of her detention has not been decided yet. Ms. Yang provided the Epoch Times with a video showing local government personnel monitoring her at her sister's house on Binhu North Road in Jintan District, Changzhou. On July 10, Ms. Yang's sister was followed by police and plainclothes officers when she went out. A video provided by Ms. Yang shows her sister loudly scolding a plainclothes officer who was following her, causing him to turn and flee. That evening, Ms. Yang stayed at a friend's house. As a result, 3 or 4 cars followed her and blocked the entrance to her friend's house. The next morning, her friend's daughter was stopped and searched by police and plainclothes officers on her way to work, almost making her late. She said, "When my sister returned home, a dozen people were watching her 24 hours a day. They even have walkie-talkies now." Because of the plenum, many petitioners are being monitored. All petitioners from Jiangsu are being kept at home and cannot move. Ms. Yang noted that since Li Yaoguang, the director of the Jiangsu Provincial Public Security Department, was transferred from Beijing to Jiangsu, the suppression of petitioners has been severe, with many being criminally detained or sentenced. They are very ruthless, arresting people without any reason. Chinese photovoltaic industry suffers losses, experts analyze fundamental problems. For many years, driven by the Chinese government's subsidy policies, the photovoltaic (PV) industry in mainland China has faced severe overcapacity. Since the beginning of this year, the entire industry has plunged into losses, with the total market value of the PV sector evaporating by approximately 557.3 billion yuan, approximately $76.8 billion, year to date. Experts believe that the only solution to overcapacity is to eliminate and digest the surplus, allowing bankruptcies where necessary. The new trio all have severe overcapacity issues. China's photovoltaic industry, a key element of the CCP's new trio strategy, has experienced severe losses due to overcapacity. In 2023, the new trio exports, including new energy vehicles, lithium batteries, and PV products, totaled 1.06 trillion yuan, about $146 billion, but within half a year, the PV industry fell into significant losses. LONGi Green Energy, the world's largest PV company, expects a net loss of 4.8 to 5.5 billion yuan, about $660 to $760 million, for the first half of the year. Its market value has plummeted from 550 billion yuan, approximately $76 billion, to below 100 billion yuan, about $13.8 billion. Silicon giant Tongwei Company also anticipates a net loss of 3 to 3.3 billion yuan, about $410 to $450 million, for the same period. By July 9, the PV industry had the highest number of companies predicting significant losses, with 7 companies, including LONGi Green Energy and Tongwei Company, expecting losses exceeding 1 billion yuan, about $138 million. Experts, like Taiwanese economist Wu Jiaolong, attribute these losses to overcapacity driven by national subsidies and the low peak phenomenon, where too many companies enter the sector, imitating successful business models. Chinese-American economist David Huang also noted that heavy reliance on government subsidies leads to poor quality and severe homogenization. Overcapacity issues persist despite attempts to absorb it through domestic demand. The expected economic recovery after the lockdown did not materialize, leading to a severe contraction in domestic demand. Consequently, companies turn to exports, but foreign markets cannot absorb the excess volume, further exacerbating the problem. Nearly half of China's solar panels were exported to Europe in 2023. Despite increased production, plummeting prices led to a 5.6% decline in China's solar export revenue. Overcapacity sparked a price war, with silicon prices dropping by over 70% and component prices hitting historic lows. The debt ratio of PV manufacturers has significantly increased, leading to numerous project delays. There are concerns about a wave of project failures in China's PV industry. By the end of September 2023, the total debt of 118 PV companies reached 1.76 trillion yuan, about $240 billion, with some companies having debt ratios exceeding 70%. Mr. Li Zhenhua, chairman of LONGi Green Energy, estimated that in the next 2 to 3 years, more than half of China's PV manufacturers might be forced out of the market due to overcapacity. Despite these challenges, mainland China's PV industry continues to expand production. By the end of 2023, China's annual production capacity of PV components was 861 gigawatts, more than double the global installed capacity of 390 gigawatts. Predictions indicate that this capacity could increase by another 500 to 600 gigawatts this year. Mr. Xiong Dong, an energy policy analyst, stated that China's expected production capacity in 2024 would be sufficient to meet global demand until 2032. Economist David Huang believes that industrial policy guidance, rather than market regulation, has led to these inevitable issues. Economist Wu Jialong pointed out that the CCP lacks experience in dealing with an economy plagued by overcapacity, leading to overinvestment and overcapacity issues across various industries, including real estate, steel, and solar panels. 68,000 child pajama sets sold via Chinese app Temu recalled over burn hazard risk. This week, a federal agency announced the recall of tens of thousands of children's sleepwear and pajamas sold through the China-based marketplace Temu due to a burn injury risk. The U.S. Consumer Product Safety Commission, CPSC, stated in a bulletin that around 18,000 juvenile kids' button-up short-sleeve pajama tops and shorts violate flammability standards for children's sleepwear and were exclusively sold via Temu. The pajamas, labeled as 100% polyester and marked Made in China. Consumers are urged to immediately take the recalled pajamas away from children and stop using them. They should contact Juveno Kids for a full refund, with the company reaching out to all known purchasers directly. Consumers are also advised to destroy the garments by cutting the top and bottom in half and dispose of them via recycling. No injuries have been reported, and the product was sold for approximately $9 from October 2022 through May 2024. Additionally, over 4,300 children's nightgowns made by Lovely Angel Children's Lace Nightgowns were recalled for similar flammability standard violations. Sold via Temu from June 2023 to May 2024 for about $10, these nightgowns were imported by Tong Tai Clothing Company Limited, DBA Lovely Angel. Consumers should take the nightgowns away from children, destroy them, and contact Lovely Angel for a refund. Furthermore, approximately 45,300 units of another Temu-exclusive children's pajama product made by Fashion Online were recalled due to related burn hazard concerns. These Chinese-made pajama sets were also advised to be taken away from children and destroyed. Other recalls this week included products not sold via Temu but made in China, Halloween witch hats sold by Claire's and Icing stores, and Swumig pajamas sold on Amazon.com. These were also recalled for burn hazard risks, with similar advice for consumers to destroy the items and seek refunds. The recalls follow a lawsuit filed last month by Arkansas Attorney General Jim Griffin against Temu, alleging that the app is a data theft business using malware and spyware to access user information and evade detection. A Temu spokesperson denied these allegations, claiming they are based on misinformation and asserting that the company will vigorously defend itself. Don't forget to comment in the section below to share your opinions on today's topic with us. If you find the information helpful, please share this video with a friend to watch together. This will be a great source of motivation for our team to produce more and more quality and reliable videos. And also don't forget to like and subscribe to see more interesting topics from China Truths. Thank you for tuning in.